There. They can hear us too, so I'll try not to talk too much. I do need to make a new song. I just think this one's so catchy.
Mezzanine trenching, mezzanine risk, mezzanine assets, mezzanine risk, mezzanine audits, mezzanine yield, mezzanine safety, mezzanine risk. Mezzanine is coming soon, is coming soon. Mezzanine pre-deposit is coming soon. Soon you will be able to deposit. Mezzanine senior, mezzanine junior, mezzanine coming, mezzanine future, mezzanine lending, mezzanine borrows, mezzanine today's and mezzanine tomorrow's. Mezzanine is coming soon, it's coming soon. Mezzanine pre-deposit is coming soon, and soon you will be able to deposit. Mezzanine audits, mezzanine, mezzanine safety, mezzanine senior, mezzanine junior, mezzanine coming, mezzanine future, mezzanine.
I still love that song. Welcome to today's Dojo podcast. It is goodness gracious, we're in August. It is August 4th, 2026. And STRC up. We should talk about why that is, if we think that's sustainable, if it's going to keep going up, or if it might crash into oblivion, and then all the yield associated, and then a bunch of airdrop stuff, and also yield. So that's what's on my. I know there's been a lot of other drama with like the Bitcoin cold card, and you know my very like simplified take on that is one, super tragic. Two, this is going to be a semi-controversial take, and feel free to be the contrarian here. But the more devices that you have as points of failure, the worse. And so Zach was kind of talking about this a little bit with like ledgers, but just the more things that you have to trust to function properly for your assets not to go away is seemingly bad. I don't know. That's my quick take, but
Yeah,
it's
I mean,
also a very dumb take. I didn't do a lot of research on it. I just kind of, it's my gut reaction whenever things like this happen.
Yeah, I mean, I think having a simplified system is good. I do think, you know, like from the OPSEC side, having clean devices, caring about your settings, having some redundancies, I think all that stuff is good, but you can definitely get too complicated. So yeah, I don't know enough about this Bitcoin card thing to like really have an opinion on it, but definitely hard to see a lot of these old school Bitcoiners who presumably had everything in, you know, cold storage ish, and you know, woke up to find all of their sats had disappeared. So yeah, just kind of another in a line of exploits that we've seen this year. You know, it seems to kind of continue on and on. I don't want to say like there's any lull in exploits, because as soon as you start talking about that, you're kind of like, you know, jinxing the industry into a really bad one. But yeah, we've seen a lot of stablecoin depegs and a lot of exploits of different kind of infrastructure this year, including one before maybe we get to STRC. It feels like layer 0 is still kind of, you know, really feeling the reverberations of all this. WBTC just moved from layer 0 to Chainlink. I think that the only two kind of big boy assets that are over at layer 0 are Tether and Athena. And by big boy, I mean like really, really big boy. There's still a lot of like other stuff. But I was looking at a Coin Desk article that was saying that's moved the tally over to $15 billion, of which, of course, Wrapped BTC is a big portion of that. But still, interesting to see kind of like the reverberations of that. And you know, obviously, it feels like Kelp is pretty much knocked out for the count. Layer 0 is taking a big hit from that. But yeah, we don't talk about DVNs very much anymore. It feels like, you know, typical crypto fashion, like everyone stopped talking about, you know, layer zero and like the issues they had and pointing out who's doing better. But anyway, we can talk about STRC. It's definitely reassuring to see this thing above 90. That happened pretty dramatically. But yeah, maybe you want to get into like what exactly happened and what Saylor's been up to. He's always up to something.
He is, and I think what he's been up to recently has been more of the "I told you I could do it. Here's me doing it" situation. So when STRC first plummeted to like, I don't know, $80, which is fairly dramatic, the largest DPAR there ever was, they publicly announced a new set of rules, I guess you could say. So and some of the rules were that strategy has to maintain at least 1 year of USD reserves. So if you guys remember, the USD reserves got down to like 5 months at one point, which was really terrifying for everyone. I think that was why everyone was running for the door. Then they, sold some Bitcoin, filled the reserves a little bit. They paid down debt, which is why the reserves got depleted. It was still very scary. So then new rules came out, which is the reserves can only be used for two things without the board like approving it, and that is interest payments for the senior debt, which is over here, and dividends, right? And you also have to have at least a year's worth of interest payments and dividends at any given time. So those were like the first move in the right direction. At the same, when that happened, they also said, but we also are pre-approving ourselves for $1 billion of purchases for MSTR and $1 billion of purchases for STRC. We hadn't seen any of that until I think last week when they first purchased like $25 million of STRC. And then this week, I think, what was it? Was it yesterday? Gosh, a week happens in a day. It's crazy. If it was yesterday, I think it was yesterday. STRC, they did a much larger purchase. It was, look at that, 92.45. They did $81 million of STRC buybacks or repurchases. And that brought us from like 89 or whatever we might have been at up to 91.5 when I woke up yesterday. Now it's at 92, nearly 92.5. It's definitely the right direction for stretch. All right, up is the right direction for stretch. But what is this signaling to the broader market? Well, in my opinion, it's signaling that there is very willing to sell Bitcoin, because that's what happened. They sold 1,638, some number like that, Bitcoin, which was like 150 million ish, somewhere around there. And 81 million of that went to repurchasing STRC. The rest went to filling up the reserve. And that is not great as narratively for Bitcoin. It's better narratively for STRC. And inevitably, I think that the thesis remains Bitcoin has to go up for strategy to survive in the long term. It just has to go up roughly on average 3% year over year. Or else this whole thing doesn't work. Like the thesis is invalidated. What this does is it gives them more time for that thesis to play out, right? It gives them a longer runway for this thesis to play out. If it doesn't ever play out, I think there's plenty of time to kind of sit and wait and allow that to happen. But before there was almost no time. So at least they bought themselves some time to see if it's going to work. That's my take. It's my quick reaction from yesterday. What about you?
Yeah. I mean, I think all that's great analysis. I was just looking at what actually the bottom was, and on the chart it shows me 70, a little bit below 75, but I also see some numbers down into the 52-week low of 71.25, which I don't know how long it stayed there for, but still, I mean, that would make us up, 15, 20% more since like the very kind of like lows that we've seen. So, as you said, heading in the right direction. I do think that it's loss. It's kind of like allure. It's kind of like glossiness where people are like, yeah, I'll just
it doesn't
be able
feel like
to
a
get
stablecoin anymore.
Yeah, 11% yield forever on it. And like, everyone will be happy. I think people have been forced to wake up to like the risks of this. I think, he will have to get it up to 100 and then continue to kind of have these deep reserves and like follow his own rules and stuff like that. And I don't know how long it would take for the market to kind of forget this major correction, but it feels like, 6 months, a year, and then maybe people kind of start treating it the same way again. So yeah, hard to know how long that takes. I do think that it's, pretty constructive what he's been doing. I think if he continues to do these like weekly buys, I think the first one was 25 million. The one yesterday was, or over the weekend or whatever, was like 80 plus million.
All right, keep talking. I'll be right back.
If he keeps on doing that, you know, I think we will kind of see this like positive appreciation. I think people are like optimistic, but still fearful, and that's pretty much how I feel as well. Like, it doesn't feel great having you know, exposure to such a volatile asset. One that, like, you know, has had kind of this like period of you know, stress. On the other hand, you know, like a lot of these STRC products have been able to like maintain a lot of like the same TVL. If you, for example, you know, you look at stuff like Apex. Let me just take a quick look at them. Apex USD. Well, I guess they're down to like $291 million from a peak of 525 million. So, you know, it is interesting to kind of like see how, you know, much capital has been willing to stay in and how much has been forced to get out. I do also think there might be quite a lot of people who have like the opinion that they're going to get out between, you know, I guess maybe where we are now and like 100. They've been kind of like waiting for an theoretically impermanent loss to turn into a, you know, no loss kind of scenario. So maybe as, you know, price improves, more people will be willing to come in. I would kind of guess that there's actually quite a few people that are still waiting on the sidelines to get out. On the other side, Saturn, let me see, where are they at? So Saturn still at 180 million. Quite interestingly, like much less of a drawdown. So like their peak was at something like 214 million. And they've only come down to 180. So like proportionally, they've had a lower kind of loss. You're also seeing kind of like the delta between them. Like it felt like Apex was just, you know, going way faster than Saturn was for a while there. And now it feels like they're kind of maybe normalizing together to be into a similar place. So I don't know. Interesting to see how those two play out. I know we're also going to be seeing more STRC products coming.
Goodness gracious.
For example, like Solstice is going to be having their own STRC product. That one will have its own tranching built into it. So, you know, there's still a lot of TVL locked up in this thing. You know, interesting to see if it all comes out or more comes in. But yeah, it still feels a bit like nervy, I would say. Are you showing us where are they at with their like STRC product? I saw they like tweeted something about it. Is that coming live soon, TB, or like what?
My assumption is that they're pretty much done with it. So like it's practically over. They just are waiting for the right time to launch it. That was my take from talking to them. Like I don't know, like a month ago. And like it was the worst time to launch STRC when they had just finished the product. So I'm glad they waited. Yeah, I am very happy about Solstice season 1 so far. Season 2, we'll see. I think I did really good. Valuations look great. We can look at that. Their STRC product was supposed to be the next thing that came out after their like USX and EUSX. Then, like, of course, the USD AI type product. And I'm surprised they actually launched the STRC 1 second. They're doing that. So, and they're doing a big marketing campaign. You can see all the tools stretching on the timeline. We'll see. They're going to have the STRC product, hopefully within the next week or two, plus tranching. Now, you know, Mar and I have like discussed probably ad nauseum how different tranching systems should work, especially for things like STRC. So we'll see what they do. I think my ideal STRC tranching mechanism would be that the yield is tranched, but not the deviation from par. So like when you tranche, a junior tranche basically gets leveraged exposure to loss and leverage exposure to the yield. And that leverage exposure to loss and yield is often different, right? So your leverage exposure to loss might be like 5x, and your leverage exposure to yield might be 3x, right? It's a pretty good ratio. So you get 3 times yield, 5 times loss exposure. It might not seem good, but it's much better than your typical leveraging on like Morpho or Aave. The issue there, though, is that if you're wrapping all of the yield into just NAV change, then if you go down from peg, that's considered negative yield, even if the yield hasn't changed. If you go up from peg, it's considered positive yield, even if the yield hasn't changed, right? Or even if you receive no actual yield. So that's an issue because you realize more loss when it goes down than you gain when it goes back up in most of these cases. And so ideally, and I think Strata is actually trying to solve for this, I hope that Solstice also did. Ideally, you would have a situation where the yield is abstracted away from the peg or from the monetary value. And so really what you're tranching is the yield. And then the junior tranche has direct leverage exposure to the price. So if it goes down 1%, you lose 5%. If it goes up 1%, you gain 5%. You don't gain less than you lose. So it's a little sidetrack, but we've just been thinking a lot about this particular
If you just
vehicle.
go to Pendle for a quick second, just something that's confusing me. I'm curious your take on it.
Yeah.
And you go to the STRC section of it. The X stock, so STRC X PT right now is so you just rank them by fixed rate 24.73%. If I click on that market, the underlying is being quoted as 33.71. Is this because they're of the way they're doing their math around like the dividend dates, or is this because they're pricing an appreciation of the asset, or do you understand what's going on here?
Dividend date, which is, so we had someone in the dojo who has made like 50%. So we talked about this months ago when this product first came on, and I never like looked further into it, and I feel like an idiot because I mentioned it for like 3 weeks straight, which is, hey, the underlying APY here is 0 90% of the time, and then on 2 days per month it spikes up to like 60%. Well, first it was 60% because it was 1 day a month. Now it's 30% on 2 days a month. And I wonder, and the fixed APY was like 10, and I was thinking, well, hey, if we can just enter the day before, exit the day after, you make a killing, right? Like it's really good. And we had one guy in the dojo who did this for like a entire time on straight, got a ton of X stock points doing it, and made like 30-40% ROI on a pretty substantial sum of money. So shout out to him. That inefficiency has largely been wiped away. You see the fixed to the underlying is getting a lot closer, right? It was like 11% fixed when we first looked at this. Now it's 24% fixed. This is also a function of the X stock points too. So underlying is, you'll see, I think if they'll show it, spikes up 2 different days. It should at least. Yeah, this is the underlying. Yeah, so it's basically 0, and then it spikes up, and then it's 0, and then it spikes up. And
you're on a weekly chart, so it's like weekly
right.
Boom. Yeah.
It should be basically twice a month, right? That you see these spikes.
That still like provides a pretty interesting thing for people who actually want to have exposure to STRC and just want to like hold a PT. You know what I mean? Like if they can just get filled by those people who are willing to buy it to just like get the yield, essentially.
24% plus price appreciation is great.
I think the people who are losing in this, I guess, would be the LPs, right? Because theoretically they're being diluted on dividend day. They're losing a portion of the yields. Is that would be your sense of like, because someone has to be giving up the yield, and who's giving it up? I guess the LPs, right?
Maybe. I mean, they're benefiting from the PT. Yeah, it's mostly PT. So they're having a great time, right? They're getting higher than the STRC yield right now. PT is 95%, so they're getting 95% of that 29 or 24. They're getting a net of 29%, nearly 30%, and they're getting X stock points. So I think the PTs or the LPs are.
Well, they're not getting much X stock points because they're just getting only basically PT yield right now.
That's true. That's true.
But someone has to be giving up the dividend, right? So who is giving up the dividend? And I think the answer has to be, even if it's just a small proportion, the LP or like anyone who's basically selling the YTs. But the static kind of person selling the YTs is the LP. I know this is like a bit of a weird conversation to have, but like it is interesting to think
the
about.
LP, you're effectively short YT.
Right.
But if the IY is so high, then you're totally fine because you're making the trade. Yeah, I mean, like giving up, I guess, in one sense, certainly. But also, I do think, we've seen a lot of rumblings in the higher level kind of chats about what point seasons are actually kind of hidden exciting. So I think some like hidden exciting point seasons were USDAI was like a hidden exciting. People were kind of rumbling about it. It was really good. another hidden exciting one I think was RE, right? People were excited about it, but no one was really talking about it publicly. Another one was what was that one from that one that did really well initially and then kind of failed because it was like a 4-year bonding process. Starts with U, I think.
Huh, I don't remember that one.
You were like pretty big onto it.
Oh,
The airdrop
starts with a U. I don't know.
I think it starts with U. And then like it depegged because it was like, oh, actually we're backed by 4-year bonds, and so the NAV is considered at maturity, not now.
It sounds like Yield Nest, but I never farmed any of that.
No, it wasn't. It was on Euler. They had their own looping things. You could borrow against it. It depegs and people got liquidated. I don't know. Anyways, there was another really big one a long time ago. I can't remember what it was. Backed by bonds, if I remember correctly, 4-year bonds. And but like some of the best airdrops are the ones that are not publicly talked about way too much because there's like very little speculation. People really don't know what's going on, but the underlying product could be humongous. So I think that this is one of those, right? Like it could be that X stocks does really well. They're one of the largest on-chain stock issuers. They already have some fairly good deals. Now, say what you want about Apex. I like the team. I like the guys over there. They are like all in on X stocks, right? They're backing themselves by STRC X. Kraken has an alignment with X stocks. I think they have the same parent company. There's a bunch of like overlapping companies with Kraken and X stocks. So being able to participate in their points programs, I think, is fairly interesting. And I do think that the IY is a reflection of that. That there is premium to the STRC yield that is purely just reflecting the point speculation. So I mean 2x. I think it's like the highest multiplier you can get to on X stocks, by the way, is this 2x. So yeah, so that's pretty cool. So you could, I mean, buying the YTs here feels kind of uncomfortable, and buying the LP here kind of feels like you're, getting maybe a 0.1x instead, but 30% APY. And then of course you are exposed to STRC. So you could hedge this in different ways, like short STRC, long the LP, but you're not getting that many points. Anyways, it was a really fun way to get points. Now it's more and more efficient, so you can see kind of like how these two lines are kind of converging into like a place of best fit. But anyways, we got sidetracked. What were we talking about?
We were talking about STRC in general.
Okay.
Then we started talking about Solstice. I think you wanted to give like a recap of Solstice season 2, and then I interrupted.
Oh yeah, I did. So the really cool thing is we got data. I talked to the team yesterday, and they gave us the numbers on season 2. So as long as their numbers are accurate, that's we got them. So the total flares 185 billion, which is almost exactly 1.4 the number of flares on the last day of season 2. So some people have been suspicious, and they said, well, not everyone got the 1.4x multiplier. What's going on? My conspiracy theory is this: that they added, they just 1.4x the total points, and then distributed the new points proportionally to people who are farming it, whoever qualified for the 1.4x, which is totally fine. I think that's a completely reasonable way to do that. I don't know if that's what they did, but I also found it curious that it was almost exactly, it was 1.39 times the previous total points. So that's what, and if they did it that way, who cares? I think it's a totally reasonable way to do it. If they didn't do it that way and they did something else, then I could see some raised eyebrows. But I was actually pretty happy with the total points because I got more than I thought I was going to. I ended up with 1.35% of the total. Anyhow, the value per million flares in flare value, we can see right here. So for me personally, I spent about 8K farming flares via YTs. I should be profitable at anything over 20 million FDV. Selling price for SLX. We are currently around 70 to 80. So currently we're at roughly $12 per 1 million flares. That would be a nice 3x on my principal. I'd be very happy with that. But of course, that is, we don't even know anything about how season 2 is going to be distributed yet. But I would say, if you are like me, probably keep your TVL and TVA keep your TVL above your TWA, which is basically like your average TVL throughout the season, so that you qualify for faster vesting, I think is what I would say. Also, if you didn't know, you're vesting daily now. So you could be claiming your SLX from season 1 every single day if you want to. And that's pretty much it. I mean, SLX price is to 77 cents. Still great. That's $77 million, not 650 million, which I think was the absolute top of the FDV. That's what, FDV is 77 million. But I think it's
pretty
still
wild to see
good.
it already down. What is that, 90%? So if it was at 700 million and now it's at 70 million, it's like
Yeah.
roughly down 90% or something like that.
Yeah, but I mean, things typically find their fair market value eventually.
Right, especially once people start getting the tokens in their hand. But yeah, it'll be interesting to see. Hopefully, again, I'm not sure if the STRC product they're launching is going to give things that much of a bump. I mean, maybe it does because people have been somehow still remaining to be bullish on Saturn and Apex, despite all the drama around STRC. There's still almost $500 million locked up in that. So maybe this will be a very bullish catalyst, and we shouldn't be underplaying it. I do think that the competitor to USDAI is interesting as well. I mean, obviously, the execution and stuff matters a lot, but it doesn't. That seems like there hasn't been as much competition. When it launched, wasn't there was one, right? It was like Gaib or something. Was that the one that was supposed to be?
That's right.
Supposed to be competing with them, and I don't know what happened to that. I'm kind of curious just to look and what happened to Gaib. They had a bunch of. Did they do an airdrop? And there was a whole bunch of drama, right? Is that what happened with them?
They did, and the airdrop was a bust, if I remember correctly. It was really, really low, or it wasn't. Yeah. I mean, there was so many stablecoins at one point in time that launched a token and kind of failed and kind of fell and just completely disappeared. I think one of the more recent ones, like Altura, didn't launch a token but kind of failed and disappeared or disappearing. But there was one that ICO'd or something on Legion, and then had a really, really bad token launch. I think that was Gaib.
I thought that was Almanac.
Yeah, it was Almanac. You're right. It was Almanac. Yeah. Almanac was AI related, but they weren't AI related. Yeah. You're right.
$20 million of TVL. I mean, I guess my point in just bringing up Gaib is there isn't a lot of competition for USDAI, whereas it feels like there's more kind of competition on the STRC side. So
But I imagine it is much harder to be a competitor with USDAI than it is to be a competitor with an STRC wrapping product, because
that's true.
Hat tip to David over at USDAI. I have heard he is incredible. Just grinding deals, grinding deal flow, TVL, whatever it is. You set him on a task and he just goes out and gets it. So the team over there is, and also they had a bunch of deals waiting. They brokered a bunch of deals before they had the TVL to give to those deals. So they were really just waiting for the capital for the deals, where I think a lot of other teams are maybe doing things a little bit in reverse. I don't know who's broking those deals, but they seem to have done fairly well with that. And they also pre-bought a bunch of infrastructure with their raise or something, so they had got things at a really good price. Anyways, USDI,
how they have fared. So at the peak, it looks like they had about almost $700 million in TVL, and now they're down to 175.
Oof, that's a far cry.
Yeah, it's come down quite a bit, but there is still valuation of the token at 248 million is still greater than their TVL. So gives you a little bit of hope for DeFi tokens when you have a larger ratio than 1 for your TVL to your FDV.
Yeah, 240, and then RE, right? RE is the other fairly recently launched token that I think has been doing okay. Where are they now? It's always hard for me to find RE without looking at Google. RE
TVL is pretty flat on that one, interestingly enough. I mean, good for them, because all the other protocols have had TVL that's come down, but they're still at 260 million compared to which has been pretty much where they were in April, and it's been just bouncing around in that range for a while.
RE or USDAI?
RE has had kind of flat, pretty much consistent TVL for quite a while. All the other ones that we've looked at have had TVL kind of coming down over time.
Yeah. It does it's an interesting question. Someone posted yesterday, a DeFi is dead, crypto's dead. It's totally over. This is the end. I think the rumors of crypto's death have been highly exaggerated, but I do understand the sentiment, right? Sentiment is not good. Sentiment is very bad. A lot of people are like, man, I wish I would have pivoted to AI. I wish I would have, this, that, and the other thing. Typically bottom vibes, which is maybe a good thing. I don't like to bet too much on like the future. So like where we are, even in the depths of this bearish, uncertain market, still good, still not bad. We have a lot of RWAs that are meaningful, that are interesting, that are like exogenous yield sources coming on chain. Some of the token launches doing really well, like RE, like Chip. Solstice, I think, had a fairly good token launch, though they're not really exogenous yields as much. We have like M Global, Fostenar having a few nice assets. I think that there's enough things coming on chain that still make DeFi interesting without the prices of altcoins or the price of Bitcoin and ETH actually going up. Of course, when Bitcoin and ETH go up, everyone gets super excited and happy. Yields don't always increase. Yields can sometimes kind of stay flat because people are doing a lot more speculating and a lot less yield. But like Pendle becomes a place where yields go up. Anywho, I still excited about DeFi. I think that we're moving in the right direction for on-chain like for bringing on people that come to our risk. Less chances to make billions and trillions of dollars by buying meme coin. More chances to be a savings account. The question is, can you do it in a nice way? I think there's so many tangents we could go on. I think I was looking at Robinhood yesterday. Robinhood is offering like 7% just on your idle capital there. X is offering 6 to 8% on dollars laying on there. Like, who's going to wrap this? Because that's those are pretty good yields. Obviously, you can't wrap those because those yields are not sustainable. They're like promotional yields. But
the Robinhood one is right, because isn't the yield just coming from like their Morpho partnership? So if you go look at the Morpho vaults, like the 7% being offered on USDG is like the same as what is being offered on Robinhood. I'm not 100% sure of that, but I think it is. For example, I was looking at Merkle, and if you look at Merkle, one of the biggest, a lot of the biggest places in terms of daily rewards. So if you just go, Merkle's probably an easier place to see this.
Yeah, I was trying to see if I have it already up. Oh, there it is. Okay.
So then you just rank this by daily rewards in that chart there. Just like, click right there. Perfect. Yep. So if you look at the first one, the third one is Robinhood. I'm pretty sure that's just like the Robinhood Rim product with $270 million. Then if you look a few more down, like supply to Steakhouse high yield USDC addition V2 vault on Morpho from Coinbase. Well, that's the Coinbase Earn product right there. Coinbase has the advantage of also being able to get.
Oh yeah, Robinhood Earn, Coinbase Earn. You're right. Look at that.
Like you're able to like also get yield from like Circle and stuff. So like there is more games being played than that. But like you can see Robinhood 7%. That's what you quoted them as paying. It's the same thing as Merkle. Same thing for the Coinbase one at 5.3%. So it's interesting to see this blurring of lines between like CFI, I guess is what you call it, or I don't whatever Robinhood and Coinbase are, CFI and DeFi rails. It's like, instead of them just keeping it in a bank account somewhere, they're actually like lending it out on Morpho in both cases, because they can subsidize it less because they're getting half of the yield essentially is coming from lending rates.
And so their only exposures are Athena, Syrup, USDG, and I guess theoretically Spark as well. It's kind of interesting because now you have Robinhood that is like risking their Earn product for a lot of people who I think are like institutional level investors on US. Like they're willing to stake their reputation or whatever on these 4 assets, and so. What does that mean for like how other teams could risk analyze these assets? Like, do we take any? I guess what I'm saying is I'd like to have understood their underwriting. I don't disagree at all that USDE, Syrup, USDG, and like Spark are assets worth investing in. But like to see a company like Robinhood or a company like Coinbase, I kind of understand they're DeFi native, but a company like Robinhood just say we are willing to put user funds into these on-chain products. It's definitely confidence boosting because I imagine they did a fair amount of underwriting, but I also don't want to pre-assume.
Well,
like Athena is really cool to see.
Not basis anymore, right? Like Athena is basically just like cash and cash equivalents.
That's true.
And
so like collateralized debt, fairly blue chip collateral.
So maybe that's probably the reason why they're comfortable with it. It is pretty amazing to see.
And these anchored for the custodian, I think. Good.
They're offering 7%, and this is yielding 3% natively. So like you can see why they're doing it. But it's also interesting that they're not doing it against, I mean, maybe this will happen in the future, but like stocks, for example, like their own Robinhood stocks.
Oh, sure. Yeah, you're right. You could
Volatile assets like Bitcoin, ETH, whatever. It's only yield-bearing stablecoins, but maybe that's where the demand is. Maybe the demand is really just like yield-bearing stablecoins. Since we're on like Morpho, if you just click there, fixed rate, there's actually fixed rate Morpho stuff.
Oh, look at that.
Right there. There's only 2 markets and basically no liquidity for it. But I mean, I think that this is going to be going into production. It's funny that mine defaulted into night mode and yours defaulted into day mode, but that's just, I guess, the difference between us.
That's right. Yeah.
Anyway, like there's nothing here like that you can do. I mean, it's like Coinbase, Bitcoin collateral. Interestingly, it's all on Base. So like it does say something that they started this on Base rather than on ETH mainnet or wherever. But yeah, so it's Coinbase, Bitcoin, LTV of 86, which is pretty standard. Borrowing USDC against it. The clearing rates for these things, 4 to 5-ish, 4 to 4.5-ish%.
Yeah.
But really small.
Amazing.
Yeah.
Right.
But hopefully this will be more.
Can't you borrow at much cheaper on like base chain against CBBTC? Though have they had like hundreds of millions of dollars to borrow against that for a long time? At like
but the borrow depth here is like less than $100,000. So we can't take those rates home with us. But it is cool to see this happening. Of course, like term finance still exists. I actually know a lot of people that use term, and they
go ahead.
They just launched their V2. So like,
they did?
Just in time. I think so. Well, here I'm sending you a link to it. I hope we're allowed to. I sent you a link directly to their V2.
Oh, to the V2.
Yeah, right. Maybe it's the same. Maybe it's the same link. I'm not 100% sure. Anyway, term, I think does this really well actually. Obviously, like the liquidity will be, less in a place like term. But I think they've kind of like figured out how this works and how it should work. And they're going to be doing a lot of stuff with like looping, right? So like on the yield bearing side of things, yield bearing assets, they have a lot of stuff related to RWAs. And like the nice part about a lot of these loops that they're showing is, they are fixed rate, right? So if you can actually like get filled and locked in, and the way it works for them is it's kind of like an order book. So people are like quoting that they'll be able to lend at a certain rate against certain collateral, and it doesn't get pulled until someone comes in and actually borrows it. So it could be sitting on Morpho, it could be sitting on whatever other place, earning a yield kind of like while you're waiting. And then if someone fills your bid and is like, okay, I'll actually borrow at 4% or 5% or I don't know, whatever the number is, then it actually fills the order, the liquidity gets pulled out of Morpho or wherever it was sitting, and then, comes and lends against the assets. They also now have looping. So like a lot of these PTs here have looping.
Yeah.
And so it's a fixed rate yield, like which I think is pretty cool to see. They are using flash loans, so like that helps a lot as well. You do always have to still like think about slippage and price impact on all these type of things, but I'm pretty sure from talking to their team that they actually model this stuff out. So I'm hoping one of the next big things that we see is the push towards fixed rate lending, and like that actually blows up, because right now looping is maybe dead is like a strong word, but looping is less interesting than it was in a yesteryear. And maybe, fixed rate will kind of bring back some of that rejuvenation of excitement around it, just because like the curator system on Morpho, for example, is just feels very carnivorous, right? Like I benefit from this because I'm always like lending out on Morpho and on Monarch and Morpho, like seeing where the dislocated rates are. And I can tell you, having done this now for probably almost half a year, there's a lot of just irrational rates that happen, just like spikes when people need to move money or withdrawal needs to be serviced or whatever. And so it beats up and it bruises the leveragers a lot. So having fixed rate stuff like term or like, Morpho midnight or whatever they're calling it, I think is hopefully in the long term, we'll look back and this will be kind of like the new state of the way like, lending works. On the other hand, for me, I will be less likely to lend, right? Like the whole kind of point for me is I have instant liquidity. I can move in and out. I can kind of chase different opportunities. So it is a different kind of lender that needs to be doing this fixed rate stuff. On the other hand, we just talked about Coinbase. We talked about Robinhood and these institutional people.
They may love this.
And they will love fixed rate, right? So like, it'll be less good for me as a lender, but hopefully better for me as a leveragor, if that makes sense.
Yeah. I mean, people are still going to have there's going to be a market for liquid rates or floating rates. There's going to be a market
Sure.
for fixed rates, and we'll see where things land. I think they're probably going to normalize around the same, rate. But usual, by the way, usual money. That's the one I was thinking about earlier. Thank you, Moscovich.
Oh,
You had commented
yeah.
that earlier.
Usual. Yeah.
That was a really huge airdrop, is what I was saying. That was a massive airdrop. It was kind of out of left field. Okay, so who like term finance? Great for them. Actually, I love the user interface. I love that they're showing these. I love they're showing these like loops here. I hope they can bring in a lot of capital. I think really it's like for the rates that they're offering, it's going to come down to either being able to incentivize, get some institutional partners to incentivize, or getting deals directly with whales, institutions who are willing to lend at 4.5%, 3.5% at size. The really cool thing about these fixed rate things is that typically there's a smaller spread between what the lender is receiving and what the borrower is paying. There's typically a smaller spread there than what you would see on a traditional like floating rate market. At least from the teams that I've talked to, in term being one of them. So that's kind of cool. So all else equal, if we had lenders who had a willingness to lend at a certain percent, either floating or fixed, and borrowers, the borrowers are really the beneficiaries of this because lenders can still get that yield with a smaller spread between what the lenders are lending and the borrowers are borrowing at. Anyways, I like it. Listed DAO is another one of these ones that has jumped in the fixed rate zone, which makes me think like it is Fluid also going to be doing this soon. Maybe they are. I think it's
just real quick before you go on to Lista, if you go back to term and you go to the order markets, I think that's actually interesting. So it's just the one, right there. You can see there's basically like two different sides of this. So you could get filled at 10% fixed rate lending against ETH with 20K available right there. Only 8 days to go, but still, like that's pretty cool that there's. Sorry? Oh, this is testnet. You're right. It is testnet. Anyway, this is how it'll look. You're able to see kind of like, an order book of what people are able to, quote at, how it's all working. This must be not officially live yet. I'm sorry if I wasn't supposed to share this, but I do think it's very cool. And I'm getting very excited about fixed rate lending. And so having an order book like this, you can actually see how it's going to work, I think will be very interesting. But Listed DAO is live. So you're happy to switch over there as well.
Yeah, the order book method is, I think, the correct one, right? So supply demand. This is kind of how Morpho V1 or whatever it was called used to work. Like there was a demand for borrowing at a certain rate, supply at that rate. Match these two people, have a great time, and also makes it more dynamic. So you're not kind of stuck with those waiting until the turn. Anyways,
it was called Morpho P2P. It feels P2P, like such a yesteryear when we were using that and like spending so much time on that, and then they ended up hating each other. Like it's funny, so ironic to me that like Morpho started as like a tool essentially built on top of Aave, and then they became like sworn enemies eventually. So
the French. Speaking of the
French,
they
do seem to be like, interestingly enough, though, like it's like with this institutional side, like you would think Aave would just be winning all this stuff, but Morpho they've got Coinbase, they've got Robinhood. There's just like so many of these products that are built on top of them.
Every new stablecoin launches on Morpho first.
Right. Well, and the only earn product that I can think of that launched on Aave is the Kraken one, and the Kraken one is actually on their own instance of Aave, and it's not even like Aave branded. It's called whatever it's called again. I'm forgetting.
Was it Inc?
It's on Inc. Yeah, but it still exists. It's like the Kraken earn product is on Inc. on their own instance of Aave, which they have a deal through Aave with, but it's not listed on. Doesn't show up like in Aave proper and stuff. So I always think that's interesting. Yeah. Yep.
So I was looking at the fixed rate on Listed. I'm gonna check that out just so I don't want it to annoy you in the back of your head. What was the name of that Kraken chain? Inc. Sorry.
Oh, the chain is called Inc., but the actual platform.
It was called. What is it? Tidro.
Yeah, Tidro.
There it is.
And so Veda and Centaur are the ones that run the Kraken earn product, and that's why they have $650 million. It is interesting though that it says $650 whatever million there, but Tidro only has 54. Tidro got hurt pretty aggressively by the kelp stuff, and then they also had some stuff with Chaos Labs had some oracles that had issues with them, and then Chaos Labs shut down. So like that market, that like Aave instance used to be huge and now it's not. And I wonder what Veda and Centaur is doing with all that $650 million that is no longer sitting on Tidro. So
excellent question. Okay, let's down. I mean, nothing jumps out as maybe super crazy interesting. You can borrow like BNB against SLIS BNB. I don't know what the going rate for staked BNB is, but the borrow rate is super cheap, and there's 8.7 million to borrow at a fixed rate of 1%. Maybe that loop is really good. Maybe there's a carry trade there. I don't know. I haven't looked too far into it. Be able to borrow against Bitcoin. U is a stablecoin at 1.3% with 300K to borrow is kind of interesting. The first one that pops out is like, hey, this is a stablecoin. It's something like I know and I can kind of underwrite and get excited about is SUSDE, 2.5% borrow rate. I think SUSDE's yield has been around there. So like maybe not a massive spread between SUSDE and USDT, but there is a fixed borrow rate. It is the kind of opportunity that we typically get into. Interesting, this is a vault listed by Gauntlet. So Gauntlet's already sort of grinding on the fixed rate sort of markets, getting their feet wet maybe before Morpho came out on Lista. So it's cool to see. Not a lot of markets, not a lot of TVL, but it's just another sort of proof of concept of this is kind of one direction, not the direction that all of lending is going in, but I think there's a fork, and the fork is now we actually have real robust existing fixed rate borrowing and lending that can live alongside of floating rate borrowing and lending, which we've come to know and love and understand. I will say probably what's going to happen is a lot of these are going to have different methods at first, and then one is going to just be the chosen one. People are going to like it more. It's going to make more sense. Users are going to just like enjoy it, and that's probably going to be what all the other ones gravitate towards. And there's going to be some wiggling in between. Yeah, very cool. Yields.io. This is a tool. Good.
Just real quick, we do have a comment on X that says they're here for the Pendle breakdown. So maybe we're running out of time. Maybe we should do a little Pendle breakdown before we get over to Yields.io.
That's true. I mean, I'm sure a lot of the Yields.io would be Pendle breakdowns. But so with the Pendle breakdowns, the way that I typically do it is I look for stablecoins you might not know of, and then I explain what they are. But we always look at like the top yields here. So we already talked about STRC X, why it has sort of a high yield, mixture of two things. One is the 2x X stocks multiplier, which I think is the only place you can get like a 70x leverage exposure to the X stocks points by buying the YTs here. What their actual valuation is, kind of a mystery. This is really like a gamble, but it's a gamble on a fairly big potential, but really very hard to underwrite. If you could have played it earlier, would have been great. SUSD3, as a reminder, this is a junior tranche for 3 drain private credit. PT 20, almost 24%, which is nuts. Like it keeps going up, but it is a junior tranche. It is private credit. Last time I checked, it was something like a 10x exposure to loss on that private credit because it was 1/10 the TVL of USD3. Maybe that's not true anymore. Maybe it's higher. That's one thing I would look into. So I don't have my VPN on, which means I don't think I can look at 3Jane right now. But if you want to know how risky it is, you should compare the SUSD3 TVL to the total TVL of 3Jane, and that will basically tell you your leverage, and then divide it by that, and it'll tell you your leverage exposure to loss. All right, the next one, junior Royco. You guys know what that is. It's junior tranche Royco. I would not touch any junior tranche STRC product at the moment. I think this is still under observation period. It will be until mid-August, I think. Junior USDAT. Actually, I'm kind of excited for Saturn to launch their own tranching product because I mentioned in the beginning of this call how I think STRC tranching should work. I think Saturn's going to do that. So that's kind of cool. REUSD, you guys know that I really like the RE team, 70% fixed, 127 days, mezzanine tranche. But please understand it takes a quarter to redeem. And a quarter to redeem does mean that REUSD tends to trade roughly a quarter's worth of yield under NAV. APY USD, 17%. It's actually pretty good. That does mean people are still speculating on points. And you also are exposed to STRC price appreciation if you think STRC is going to go up. 2 different markets for this. If you'd like to go look at them, SUSDAT, you guys know what that is. So STRC. The next one that's not STRC is Anopal. I talk about this every week. Brazilian credit, right? I could do an entire 10 minutes on why yields in Brazil are high. But basically, there's a thing called the Selic. I don't know if you have to pronounce it in Spanish, like Selic. I don't know. But the Selic is their treasury yield. You can consider it's like the Fed rate. Their Fed rate is like 14% or like 12%, one of those two. And so anything any Brazilian yield has to beat that. That's the risk-free rate of money in Brazil, the Brazilian real. So you have to beat that. And so basically, this is credit card receivables in Brazil. So Brazilian credit card receivables. So they start with the Selic, which is like 12 or 14%. Then I think it's 14%, 14.25%. Then they, from the credit card receivables portion, which is basically markets selling credit card debt, people who are willing to buy it for cheap because they just want the cash flow instantly. It's worth like 6%, right? So 14% base rate plus 6% for the additional service being offered, which is, basically paying markets today. So they have instant cash flow and buying their debt, add 6% to this. So it's roughly like 20%. And then what Opal or Black Opal does is they hedge for Forex. So they take the Brazilian real yield there, which is around 20%. They hedge it into US dollars. And then, of course, they take some sort of fee. And it ends up being somewhere around 11%. It says 16% because Plume and Nest are incentivizing this, which is crazy. They're adding another 5%. Really insane to me. On top of this, it costs a lot of money. You have to incentivize the notional value, not like the YT value to get that. Anyways, they're incentivizing it. So the base rate is actually around 10 to 11%. They're incentivizing another 5% in Plume. And so that's sort of why the PT is up. USD3 is senior tranche 3-chain. So we talked about 3-chain for private credit. This is senior tranche, much more protected. It's a really nice fixed rate, nice 134 days. I think it's easy to enter and exit USD3. That's the one thing that I'm not positive about, but that would not make or break it, but that would make this a lot more attractive. If you could just easily, enter and exit USD3 into USDC or something, mint redeem would make this really easy. USP, this is not the Pareto one. I always forget what this is. PQ, I remember looking at this. I wasn't a huge fan of it. Very low TVL. I wouldn't spend too much time on it. Me personally, if you guys want to go underwrite it more, you can, but low TVL, I remember just it wasn't for me. And I will say, not to like toot my own horn, because you should never grave the answer to your own horn. One of the other yields that recently was just not for us was Altura. And, we had mentioned almost every single call that it just like was not something that we particularly found compelling and we couldn't underwrite. It was like gold being transferred to Dubai. We just couldn't, because we couldn't underwrite it, we didn't participate, and that ended up saving us. So if you can't underwrite something, often it's just better not to touch it. I still hope that they recover and they have a great rebound, but that's just recent data point. APX, this is still exposed to STRC, unlike USDAT. USDAT is not exposed to STRC. SUSDAT is. So, both these are more STRC products. The next one that I think is kind of interesting is Tori. So Tori, this is their stake product. Basically, they do a bunch of institutional type of yields. So, basis, carry trade, CME basis, options, hedging stuff. Their underlying yield is 11.23%, pretty good, but it's also based off of a lot of TVL and TRUSD and point speculation from the TRUSD portion. So you can see TRUSD gets 0 yield, but they're at 10% because of the interest in the points there. So that's another fairly interesting one, and they're very transparent, which I like a lot. So you can go check out their transparency. Back to more STRC stuff. 40 acres, low TVL, wouldn't touch it until the TVL is higher. And then Avant. We all know Avant is a senior tranche. Avant, 9%, 11% actually for 1 day left. So unfortunately, only 1 day left. And then after we get to the 10% range, it kind of becomes less interesting for me. I can go lend, on Morpho fairly dynamically for around 8 to 12%, and then be fully liquid and not have to deal with, swapping in and out of PT. So that's where I will end the PTs. Is there anything you wanted to add to that I may have missed?
No, that was a fantastic breakdown. Yeah, appreciate that.
All right, you did send me a Camino thing. Can you talk me through what that was before I jump?
We don't talk about that now.
Okay.
But it is, they're launching their own kind of institution. We were just talking about institutional like lending stuff, and now Camino's having their own one. I think it's gonna have like a lockup period, but it'll be 7 to 8% on the credit side. It seems like everyone's getting into kind of like the credit stuff. So of course, Athena is getting more into credit. 3Jane's getting more into credit. All these people are getting into credit, but it seems like Camino's tipping their hat on that side as well. So low capacity, like they're launching this initial vault and have $25 million of capacity. But I imagine it'll be something that scales, and maybe not like the first, but like, one of the bigger players on the Solana side getting into it. It feels like there's been a ton on the EVM side doing this kind of thing for a while.
Love it. And then, of course, we can take that like institutional yield, compose it, and then leverage it against fixed rates at 4%. Super happy. Someone else's institutional yield. fantastic. Really quickly, yields.io, Dean Toshi made this. We've talked about it. We continue to talk about it. We use it as a source of data. It's really easy to, at a glance, see sort of what's out there in terms of leverage loopings. Often, we just wouldn't touch a leverage loop in general because they're super volatile. Really, you want to look for where there's a lot of liquidity. I don't look at anything under the 1 million, and even for the 1 million, it's better to look for things that are really, really big. So things that have 10 million or more liquidity available, but things can pop out. So some smaller markets like PTUSD3, right? This is the senior tranche PT, currently at 61% looped APR. So if it is easy to enter into that USD3, again, like we mentioned, that would be a massive benefit. If it was easy to exit and enter USD3, then 61% max leverage is fairly interesting, right? So things like that will pop out, will kind of be cool. Also, just kind of cool to see like you can long USDAI and short Go on Fluid, only $2 million to borrow there. But if you wanted to kind of play the peg variance of Go, it's got a lot more tight recently, but you could do that. 41%. Wow, we should have talked about Metronome and like the whole fallout there. People who are leveraging MSUSD, by leveraging I mean borrowing it, did really well, exited at massive profit. We'll see if they are able to repeg. The whole situation is kind of a mess, but luckily the majority of users were inherently short MSUSD. The real people who got hit were the people who were providing liquidity, and it had been a good LP for a long time. So that one kind of sucks for them, and I do hope that they get all their money, and then some more. Syrup with 48 million here on Monad. Interesting, 23%. I think that's a really good one. 48 million is great. It is Aave, so like even though 48 million seems like a lot, the utilization is 66%. So if this goes to like 75% or 80%, that interest rate can creep up and reduce this yield. And of course, bigger borrowers tend to go into Aave, and so like this 48 could get eaten up by a whale, faster than maybe that 3 million on Morpho. So, anyways, it's a great tool, and also Yields.io now has their own Twitter account, so I will gladly shill that. I think it's a good product, so go follow the new Yields.io X account. That's it. So there are a lot of other things we can talk about. There's so many other things. You can look at the earned products on Gauntlet, the earned products from Stakehouse, how Stakehouse is getting all these institutional agreements. I think it's all sort of kind of cool. What's going on Robinhood, what's going on with Arcus. But I think Arcus still needs a few more updates before it's really interesting. So hopefully we'll have an update on that next week. STRC is almost at $93. This is great. So we'll see what happens there. Anyways, thank you guys so much for watching. Enjoy the song as we end the stream, and have a wonderful rest of your day.
Mezzanine trenching, mezzanine risk, mezzanine assets, mezzanine risk, mezzanine audits, mezzanine yield, mezzanine safety, mezzanine risk. Mezzanine is coming soon, is coming soon. Mezzanine redeposit is coming soon. Soon you will be able to deposit. Mezzanine senior, mezzanine junior, mezzanine coming, mezzanine future, mezzanine lending, mezzanine borrows, mezzanine today's and mezzanine tomorrow's. Mezzanine is coming soon, it's coming soon. Mezzanine pre-deposit is coming soon, and soon you will be able to deposit. Mezzanine audits, mezzanine, mezzanine safety, mezzanine senior, mezzanine junior, mezzanine coming, mezzanine future, mezzanine lending, mezzanine borrows, mezzanine days and mezzanine tomorrows.